Yeah, hi, good evening. Thanks for watching. I hope you guys can hear me. Right. Yeah, hi, good evening. Thanks for watching. I hope you guys can hear me. Yeah, sorry, it's the echo there. Can you guys hear me? Yep. Hi, Yuan Tong. Okay, great. You all can hear me. Thank you very much. Thanks for joining this session. The main purpose is this session is, of course, there's a lot of, on one hand, there's a lot of uncertainties in the market, right? Especially after today, right? People are wondering, what is going to happen, and also what is the latest situation, right? At the same time, as you know, we have been raising funds to actually provide provisions to the needy during this period, right? So that's why we are trying to do this session as a special session, as in um, as the session goes on, I mean, there's no obligation, but anybody who wants to donate, of course, you're most welcome to donate. And I said the bank accounts there are provided below. We really hope that we'll be able to actually raise funds in this session. Remember the olden days, those who are as old as me, the younger one, I wouldn't know. Right, there's always this charity TV shows, right, where for the next 1-2 hours, they'll actually encourage people to actually donate to actually raise a certain amount of funds. Right. So maybe I will share for those who are not familiar with what we are doing. Okay. So basically, this is our Facebook. So all the donations will actually, you'll be banking direct, not to me. You will actually be banking direct to KMSSG. KMSG actually is an abbreviation for Kriya Lakshmi Mandir. Right, it's a non-profit organization. As you can look, this is actually the Facebook page. Right, we provide spiritual classes to students as well. So as you know, this picture you can see, these are all our students. And we have been updating the provision project that we have undertaken for the last 2 months, right? So whenever there's a project, we will actually be accountable and update in our Facebook. And this last post was in August 16, and on that day, there's actually 37 families who came and collected the provisions. And for the last 2 months, we totally assisted 1,058 families. So there are still a lot of families in the list. I think roughly 100 plus. So if you take a budget of 200 ringgit per family, that's what we provide. Provisions to last them a month is around 200. So we really hope that we can actually raise up to 30,000, right? Hopefully, right? With universe grace, things like that. And this is actually whatever we buy any provisions, our students will be packing. So they'll be packing provisions, and these are the pictures of those completed packs that we have got ready to distribute. And this is usually what happens during distribution, right? They will actually come and recipients will come, show us their IC, we'll check their details, whether is it matches, and then we actually distribute to them, right? And again, these are the bank account details, which is at the banner below. So I really hope that during this whole session, if you can, please hope to tap into generosity of the Malaysian public so that we can actually do some good things out of it. Yeah. Maybe half an hour, 15 minutes to actually update how much I've collected. No names will be announced, don't worry. I mean, you don't have to announce that you have donated. Once you bank in, our treasurer will there be every half an hour or so. She will actually check what is the amount and then update how much I've collected so far. Yeah, hi. Okay, thank you. That is so please, if you have any question, please ask. The first question comes from Yuan Tong. How is Monday market? Good question. I believe if you look at it, markets are quite realistic in the sense markets are emotionless to a certain extent. Markets tend to be very rational. Rational in the sense what market actually wants is certainty. That's it. As long as you have a certainty, right, and you resolve a big part of uncertainty. Because bear in mind, you think about it, this thing about not having enough numbers is actually nothing new, right? It actually started way back in January, right? There's this question about not enough numbers. But I think whether we like the result or not, that's a separate matter, right? That's something we feel personally. But I think this result, as I mentioned, whether we like it or not, is actually put close to the so-called the question over the numbers, right? The validation of that, right? So I think my take, I don't think market will be negative or bad on Monday. It actually provides some stability and end to it. Yeah, and then again, on the other hand, don't forget. Wait, let me turn down the lights if it's not bright enough. Okay, yeah, better. So don't forget, at least it's another 15 months to the next election. So it is pretty close. So long and short, I don't think market will be quite bad on Monday. Yeah. Next question is from Lincoln. What do you think of China tech stock? This is a very interesting question. Let me think of how to I phrase my thoughts into it. There's multiple aspects to look at it, right? Let's look at in terms of the business perspective, right? Unfortunately, this not only happened in China, but you look at US tech stocks or even global tech stocks, right? They've grown so big, right? That they control a lot of the data. Like if you think about it, if there's any new social media player who wants to come out, Facebook will buy them over, offer billions and just buy them out. But whichever new competitors who want to come into the space, right, they will actually grow so big to actually just buy them out. So what is going to result is that globally or going forward, right, the data, which is a valuable thing, is going to be on the hands of a few players only, not only in US, but the same thing you're going for in China, right? So that's why you look at US, there have been a push, of course, unsuccessful, to actually split up the tech companies so that they won't be so monopolized the whole industry. And if you really go do some research about it, I think the voices are still there to break up the big techs in US. But of course, it's because of all the lobbying, it's not going to happen. So look at on this aspect in China, right? China, to a certain extent, is still being run by the PRC, right? No, sorry, by the Communist Party. No, not in the bad sense, but in a sense, you see, for them, they're trying to balance everything. Let's take the few weeks ago when they cracked down. Okay, when they used to crack down, when they stopped online tuition business from making profit, right? If you follow the news, few weeks ago, the Chinese government actually made a new regulation that anybody who's providing online tuition in China, you must be on a non-profit basis. So that means where they're coming from is not they're trying to actually disrupt the business, but what they realized was that there's a wider gap in educational level. Those parents who can't afford to pay, they are sending their children to these online courses, and it's a multi-billion dollar industry. They did a statistic, I think it's multi-billion in terms of revenue generated. Right? But on the other hand, those who really can't afford, they can't pay for this tuition. So what they noticed was there's a big divergence in the students' capability level, right? In terms of the passing of examination. So the rich are getting better results, and the poor are getting poorer results. So this is another aspect. Right? So what I'm trying to say is, I don't think the Chinese government is trying to actually eliminate the tech stocks, right? Or to make these companies vanish or to close down these companies. I think what the Chinese government is trying to do is just to bring in the industry. Also for, first is on the social perspective. Second is more for, so that the data is not hogged by certain parties. And don't forget, these are private enterprises, right? So there is always a security risk. How will the data being used, etc., etc. What if a foreign shadow comes in and this data actually ends up to that? Okay, so my take is continuously you're going to see more and more tightening of regulation, but it's not trying to close down these businesses. It's really more of setting things right, so that all this data will not be hawked down by certain parties, so that there will be more equality in terms of this disbursement of information among the citizens, so on and so forth. Yeah, so the concern will still be there, but I must stress it's not for the purpose to close this business down, right? It's really to bring in some of the parameters there, right? Yeah. I hope I answered your question. Oh, what do I foresee a problem that will be faced by livestock and dairy companies? I usually avoid livestock and dairy companies, to be very honest, on humanity grounds, not because of anything. I always have issues with take poultry companies for instance, right? They for the layers mean to say that the industry. Okay, it's not Malaysian chicken industry, for instance, right? We call the broiler industry and of course the layer industry. The layer is for the eggs and the broiler is for the chicken meat, right? I think my biggest issue is wherever there's excess stocks, right? Is how the excess stock being treated. Yeah, no, that I think on humanitarian ground, I'm more against that. So I have never really go into that. But I don't know, Bradley. I mean, maybe you can clarify later what specifically problems you think that is going to. I mean, what made you ask this question so that I can actually answer it? Because at the moment, I don't foresee any problem. So I don't know what is your concern there yet. So help me with this, Bradley. Okay, there's one from YC. Will the US tapering start within expectations trigger global market crash? Will tapering starting soon? I always talk about this, right? If you really think about it, we always think market tapering is something bad, right? Something very negative. But I'm just trying to bring you the other side of it, right? If you really think about it, right? The two biggest issues that always affect stock market is, of course, your announcement of tapering, which is, of course, you can call it reverse QE, so on and so forth. You can also call it tapering. Okay. And second thing is, of course, the interest rate. Right? If you think about it, you put yourself in the position of a Federal Reserve or a central banker, right? At which point in time would you be comfortable to do a reverse QE or a tapering, or to increase interest rate? You will only be confident to do that when you know that the economic situation is strong enough to withstand it, right? The last thing you want to do is when the economy is weak or just about to recover, and then you do a tapering or you do an increased interest rate, which will then totally affects the market. So unfortunately, at market being market, right? Market, whenever they hear about the risk of tapering, market will actually be negative. When they say that the interest is going to increase interest rate, the market is going to be negative. Right? But I think somehow markets are reading the signals the opposite direction. Right? But I tend to take this as very good signals that whenever the Fed has intention to increase the interest rate, it actually shows that they are seeing that the economy is strong enough to withstand that. Okay, that one thing. Second thing is, see, market always react in advance. Remember a few months ago when there was this talk about risk of inflation in the US, and then the Federal Reserve did indicate there could be a trend to increase interest rate in 2023. I must stress that 2023. That is 2 years down the road. I think the market overreacted by having a correction in the market. People start to have fear that the interest rate is going to increase in 2023, right? Which stagnate 2 years down the road. But I think unfortunately market reacts quite negatively for some reason. Right? See, what they're saying is 2023, 2 years down the road. Okay. Likewise, for me, I think tapering wouldn't be happening so soon. I think the recovery has just started. Yes, you see that yes, there's a lot of liquidity that's pushing up the market, but look at in terms of the real economy. I think excluding Malaysia, I must rephrase that. Globally, it is still starting to recover. So I don't see the tapering to happen at least within the next 12 months. Not so soon, right? That's my take, right? But then again, if you think about it, even when they do tapering, remember the last tapering they did was, I'm not sure if everybody was aware, it was a period around 2013, 2014, 2015. It was actually where the Fed did tapering, 2014 onwards. But if you notice, nobody really felt it. And the market was still very, very strong. I say globally, right? Global market or US market was still very strong within that period. So what I'm trying to say is again, yes, even when they go under tapering, they are smart enough to do it in an orderly manner and not on a shock to the whole ecosystem basis. The Fed was actually on a tapering since 2014 all the way until 2019. But it was after this pandemic that actually they reversed the tapering and they go for another round of liquidity injection. But if you think about it from 2014 to 2019, nobody really have an issue with tapering, right? I mean, it doesn't even capture the headline saying that, oh, US is going for tapering, so on and so forth. Yeah. So again, I hope I answered that. I don't think that, long and short, I don't think a tapering will happen soon. Yeah, just it. What makes so much difference between in terms of share price to one or in terms of PE in Amazon and Alibaba? Okay, I'm trying to answer. Okay, I think your question is why there is a very different stance in share price performance and also the PE valuation between Alibaba and Amazon, right? I think the biggest difference is, of course, to that extent. Number one, of course, the situation in China is not helping. With the Chinese authorities, in the lack of a better word, I use crackdown on the tech industry, so that will further depress the sentiment on the US, on the China stocks. But on the other hand, look at it, right? If you really look at the business model, it's actually very different. It's quite different. One of the biggest growth in Amazon business profit is actually the cloud services, or the AWS, their cloud service division, right? And that's actually the one that's going very, very, very strong. Second is, of course, the dominance. I think Amazon still have a very much stronger foothold and dominance in the industry. And therefore, it actually explains why the share price performance and also the PE performance. Cloud storage is more lucrative, or let me rephrase, it's much more lucrative. And that's where it's not only to Amazon. If you look at even companies like Google, Amazon, even Microsoft, right? If you really look at down in terms of the business segment performance, you actually realize that the big bulk of the growth, actually, the cloud services is actually doing very well. Yeah. Let me check my message if I get an update. Yeah. Okay, let me check update. Okay. As of now, I got my latest number from my treasurer. Thank you so much. So far, we have raised 6,350 ringgit. Thank you so much for your kindness contribution. I do hope that for those who actually are viewing, so any amount is welcome. Really help us to actually continue with this provision project, because honestly, currently we are lack of funds. We got more funds to continue. Yeah. Right. Thank you so much. Okay. Okay. This from Sean. What is my outlook on growth on portal FPSO industry? FPSO is actually floating production and storage. I mean to say, the vessels, these are big vessels, floating storage. So these are related to oil and gas industry. My take is this. I think in 2013, when the oil price hit $120 per barrel, right? Conveniently, a lot of oil and gas service providers have been categorized as oil and gas conveniently, simply because if you call oil and gas, you get very, very crazy valuation for them. But if you take a step back, I think what defined as an oil and gas player is always the business model. We always must look at the business model to determine whether are you really an oil and gas player. FPSO is a service provider of oil and gas. They are not really an oil and gas player. Their business dynamic is just oil price is high at the moment, right? I mean, high in the sense it is recovered significantly compared to last year and is at quite a high level compared to even 2-3 years ago. But at this level, I don't think that the FPSO still have the bargaining power for better charter rate or to push up the charter rate even higher. Because my take is, I could be wrong, there's still quite a lot of vessels floating out in the market. So there's still quite a lot of level of competition out there that will actually prevent them from actually getting much better rates. I could be wrong, but this is my take, right? So that's why I'm not really so keen on the FPSO industry. The second concern for me of FPSO is the balance sheet. The business model is just you take up a loan, you buy vessels, and then you charter it out to the oil and gas players, and then you take the cash and then you pay the bank. So it's really not a business model that I'm so keen per se. Yeah. Hi Li Jing. Okay, thank you so much. Okay. There's one for. What do you think of Malaysian plantation company and current CPO price? I remember you mentioned companies that can't control their selling price, then should control their costs. Should apply this strategy for screen plantation. Oh, you remember what I said? Yeah, there's two aspects here in your answer. I'm not sure if you followed our paranomic view session. Trader Analytics, actually, we have this monthly market outlook session, which I call it panoramic view. it happens on every last Sunday of the month. Right? It's also the last Sunday from 8 to 9:30 p.m. So what we'll do is actually we'll talk about what is a market significant event during that month. And also on and off, we talk about industry. I think if I remember correctly, you can check back Trident Analytics website. I think in March, we actually run a session on commodities. I think it's March. Yes, March. We actually run a session on commodities. We can actually have a playback there. So my of course, even way back March, the question is that why are the CPO prices running, but the plantation companies' prices are not, share price are not performing as well, right? There's this divergence behind that. I think my answer that time was, see, CPO prices, like it or not, it follows soybean oil price, right? It actually moves in tandem, right? So you can say to a certain extent it's at the mercy of soybean oil price. And one of the reasons why CPO price have been going up, of course, soybean oil price have been going up in the first half of the year because of there's a very strong demand in China as well, right? Because of their food security policies. Okay, now, it's quite taken that second half of the year there will be going to be a bumper production on the soybean oil, right? Soybean crop in that sense. So we are expecting soybean price to actually weaken. So when soybean price weaken, generally CPO price will also weaken as well. Because like you know, although they are not competitors, they actually follow each other. When I say follow each other, soybean tends to lead where the CPO price is, right? So that's the first aspect. So that's why there's not much interest in plantation stocks despite very good profit. Second, you're very, very right. If you look at cost structure, right? The cost structure of plantation companies now is very different from even 8 years ago. Or remember the last rally in plantation stocks, I think 2008, prior to up to 2008, there was a very strong rally in plantation stocks, right? Over the last 12 years, the cost structure has actually changed significantly. Costs actually increased substantially, partly, unfortunately, due to government policies. There's a CPO tax per se, right? So the other aspect is why plantation companies are not getting the valuation they used to enjoy way back in the previous rally is the cost structure. The third point, yes, you mentioned, right? I used to mention about this. When you run a business, right? There's two elements, and you must at least be able to control one of the two elements. That means the first element is your selling price. The second element is your cost, right? So if you're in the business where you can't control the selling price, I mean the selling price is determined by the market, you must be able to control your cost. If you're in a business where if you can't control your cost, means it's fixed for some reason, then you must be able to control your selling price. If the best business is you're able to control both, means that you're able to control your selling price and you're able to control your cost. The worst business is you're not able to control your selling price and you're not able to control your cost. CPO, I would say, if forced to say, can they control their cost? I would say they can't control their selling price. They can still control their cost by their efficiency. So I would say that plantation stocks are still able to control their costs beyond on the efficiency basis. Yeah. I hope I answer your question, YH. Okay, Matthew Koi. What do you think of oil price? Will the oil price still have room to go higher? Last month, July, we actually had our second half market outlook. Again, the video is available replayed in Trident Analytics website. We did touch about oil. Okay, now, I have always been a believer that the natural level for oil price is $70 to $80 per barrel. Remember, even last year when the oil price crashed, I mean, for those who have been following my session, I say, yeah, no, I think oil price will go up to $70, $80 per barrel. And even way back after the 2014 crash, when oil price again went to $30, I was saying that no, I think oil price will still be $70 to $80 per barrel. Okay, what's my take now? My take now is oil and gas price will sustain at this level, but it will be on an uptrend basis, right? Okay, now I need to stress, oil price going up is not the issue. The speed of going up is the issue, right? So although I believe oil and gas price will go up, but my take is it's going to be more on a gradual trend, not a volatile, like suddenly wake up tomorrow or wake up next week, suddenly oil price is $100 per barrel. It's not going to be that. It's more of a gradual trend. Why? To me, environmentalists may not agree with me, but I think this actually a lot to do with the net zero policies. I mean, for those familiar, net zero is actually by 2030, if I remember correctly, or 2050, I think by 2030. You can't meet that deadline. We're only a few years, 9 years away, right? You have to be, your carbon has to be, emission has to be net zero. It means to say whatever carbon you emit to the atmosphere, it must be counted by the amount of carbon being taken out from the atmosphere. So the biggest so-called culprit about carbon emissions is always the oil and gas industry. So with this push towards net zero, what is happening now is the listed oil majors, right, are being pressured to actually exit the conventional oil and gas business, means to say exit. So you can notice a trend for the last few years that be it Dutch or Dutch Shell and Exxon, they've started to dispose all this oil field, right? To who? To government-owned oil and gas companies, or even to private entities where they are not listed. Private entities, because they're not listed, they're not being scrutinized by the green environmentalists, right? So they are safe, quote unquote, they're safe there, right? Okay, so what is going to happen is, because of this push to net zero, the investment in oil and gas exploration will actually taper off, right? But the next question is, are the renewable energies, are the alternative ready to fill up the gap to replace the fossil fuel? I think the answer is no, right? That is why we are still not there yet. So see, on one hand, you have supply gradually tapering off because of this net zero initiative. On the other hand, the demand is still there. So what is going to happen when the demand is still there and the supply is going to be, all price will need to go up, right? So this is my take. My take is, unfortunately, all price will be on uptrend, and this big part of it is actually due to these net zero policies. Yeah. So I will answer your question. Oh, from Harry. Yeah. Which sectors are likely to recover first when the pandemic is over? Yeah, this which you're seeing very obviously in the US is actually the consumer. They call it the revenge spending. You've been locked down for your house for so long. No one's allowed to actually shop, right? You technically shop. You think go out to actually shop. It's what I call revenge spending. I think that the first one, of course, retail space will be doing quite well. Will do well in the recovery. That's the first one to experience it. The second sector is, of course, construction activities is always the biggest push to economic activities, right? So I guess economic construction will be moving, and when construction move, building materials will actually also be a beneficiary, right? Things like your cement, your cable support system, so on and so forth, that will actually do quite well. The third section, leading recoveries, of course, of banking activities. As economic activities start to grow, banking will actually be, technically, the barometer of economic activities is always the banks, right? So the banks also be the leading indicator of economic recovery. Okay. From Asun, what are my thoughts on digital banking license that BM will issue next year? There are only 5 licenses to be given out. Will this put risk to existing traditional bank? No, I don't think so. I think let's put it this way, right? Like it or not, existing banks still have the dominance in the market. Digital banking is the future. I mean, there's no doubt about that. But then if you really start to think about it, the cost is not that easy, right? So yes, there'll be 5 license givences, but likely what is going to happen is the cost structure will be at a disadvantage. And second, the level of competition will actually make these digital banks very difficult to make a profit out of it, right? So that's my take. And it is hard to actually challenge the dominance of the existing bank. Let's take e-wallet, for instance, right? See, there are a lot of newcomers, but look at the existing players like your Touch and Go, like even your Maybank, right? When they launch a wallet, they're able to actually offer more services or more usage compared with any newcomer who try to penetrate to this industry. So yes, you will be hot. You generate a lot of interest, a lot of investors who actually put money in digital banks. But honestly, I'm not so keen about it, because I think it'll be very difficult to make a profit out of it. That's my take, right, from the digital bank license. Yeah. Wait, let me, what's the next question? Yeah, let me, okay, this one. Bursa trade bond has declined since last year. The share price of Bursa has already weakened. What do you think about retail-driven stock boom? Will trading activities and sentiment normalize to pre-pandemic level or likely to settle at a higher level? This okay, maybe let me pull up the chart which I actually shared during the second half market outlook, which will actually answer this question. Yeah. So give me a moment. Okay. Okay. A second half. Wait, okay, found the file. Okay, let me check. I see it. Okay, found. Okay, I actually presented this in July. We have a second half market outlook. For those who are keen, you can go to Trader website. It's there. Okay, this one actually shows the cumulative trade position between three parties, right? First, of course, is institution. You mean to say the institution funds are your EPF, your unit trust per se, which is the blue line. The second line is actually the gray line, which is the foreign investors. And the orange line is actually the retail investors. And this one was up to 5th of July, which was technically last month when we had the few days before we had the session, right? Of course, we tend to think, right, that no, as the economy slowly market up, retailers will be trading less. But when we pull out this chart, it really surprises me as well, to be very honest, that if you notice, the retailers are still going strong into the market. They're still buying. You see, what's interesting, you take these three lines, when add together, it will be zero. Because when somebody buy, somebody have to sell. So it's very clear. Look at this chart. It actually starts from 1st January. So starting on 1st January this year, actually institutional and also foreign investors have been selling in the market. It's actually the retailers that have been actually buying in the market, right? So if you look on the longer year perspective, this one I did since 2011. So let's take a look at around a 10 years horizon, right? Same thing, you know, this blue line, which is the institution, they have been buying last year, but year to date have been selling. Gray line, which is the foreign institution or the foreign investors, actually they have been exiting the market after 2013. You look at the gray line, it's actually on a downtrend. Not only this year, but they have been on a downtrend. Retailers, your orange line, they start to pick up very strongly last year, and they're still picking up. So retailers have been actively buying. Okay, now what is my take? Is this going to be a new trend? I have a very painful answer, right? Until it gets burns. Right? I think retailers are still very active in the market. And to me, that's not an issue. It's good for retailers to be active in the market. But I think the more important question is, do you know what you're buying into? Right? There was this, I'm not sure you know, Andrew Sheng, Dato' Panglima Andrew Sheng, he was just in the 1990s, right? When he was the SC for Hong Kong Stock Exchange, right? The commission. So that time Hong Kong stock market was going crazy. So reporters was asking him for a comment, right? What is his comment about this surge in the stock exchange? And he gave a very good answer. He gave exactly the same answer as the thing is not whether it's active or not active. The more important is, do you know what you're getting yourself into, right? So my take is, if a lot of first-time investors got into the market last year, they got in the market this year, right? I think to a certain extent they're riding, you know, the glove sector making a lot of profits, the tech sector got profits. Correction will come, right? right? So a more important question is when the correction comes, whether will they be hit, and for those who are hit, likely they will not come back to the market for quite a while, right? So long and short, my take is this. I think this will be a trend over the next few months, or let me rephrase it. This will be the trend until a correction comes, right? And that will really test whether these investors will sustain or will come back, right? Yeah. So again, I hope I answer your question on that. Okay, now it's 8:35. Let me check. Okay, thank you. I just got. So far we've raised 8,558. Thank you so much. Do keep your questions coming, and also do keep your donation coming. Thank you very much. Yeah. Okay, this is a question. Macroeconomy that actually doesn't really affect the individual stock in the market. What do I think? Okay, this is a good question. Okay, I think really what he's trying to ask is that whether does macroeconomic situation affects an individual company, an individual stock. The answer lies with what is the business of the company, right? What is the nature of the business and what is the business model, right? There are some business model where it is not so much affected by macro situation, right? If it's a necessity product, right, for instance, right? So that's why I always stress before you invest, the first thing you need to do is you already need to really look at what is the business model of the company. Whether do you understand the business model, and then from there you need to form an opinion whether this business model are they affected by economic situation, or what are the economic condition or the events in economy that will actually affect their performance, right? So the answer is not an absolute yes, not absolute no. The answer really depends on the nature of business of the company. Yeah. All right. This is related to the earlier question, right? This by Don comments on Perak Transit. Despite COVID-19, they still perform quite well. Okay, the reason I put it on is quite related to the earlier question. You see, this is what I meant by business model. Okay, let's talk about Perak Transit, right? But I must disclaimer, this is not a recommendation to buy. I got no, it's not. I don't give stock selection. I'm just explaining business model. Yeah. So you see, Perak Transit has always been deemed as a bus operator because if you go to Perak, you can see those buses with the bus Perak Transit. Right? So people always assume, well, it's a bus operator. Well, if it's doing an MCO, people can't travel in bus, your numbers will be affected. But if you really study the numbers of Perak Transit, you actually find that they are not actually a bus operator. Their business is actually a rental business. Okay, they don't rent the bus also. What they do is the bus terminal. So they will actually own the bus terminal, and not inside the bus terminal, there's all these shops, right? They actually rent those spaces out, and also the advertising. Sorry. Also the advertisement banner in terms of the bus terminal. Okay, they own the Kampar bus terminal in Perak, and also Meru Raya. These are the two terminals they own at this moment in Perak. That's why the Perak Transit. Right? So their business model is rather stable. Mean to say it's more of rental of advertising. Okay, now again you say, well, during this kind of pandemic, the rental space may actually go down. Okay, again, how they run their business. So the way they run their business is for the advertising space, right? They actually pre-sold the advertising space to advertising agents. So the advertising agents will then sell the spaces. So they have quite secured. So for them is, I secured my 1 year revenue. How much the agency can make to sell the spaces, the risk is on the agency. So they're taking a very conservative approach. So this is what I meant by business model. So because they built their business model on this perspective, or in this way, they are not so much affected by the pandemic. They are affected, but not substantially affected. Like suddenly, when I see there's no ridership, because again, you look at the numbers, the profit never come from ridership of the buses. The numbers actually come from the rental income from the advertising spaces and also the shops. Yeah, so this related to the earlier question. Yeah. Okay. I guess the insight of the life definitely RE. Do you see commonality between skills needed to manage FPSO business and versus renewables? As players are chasing RE projects now, due to the number, do you see RE become overly competitive and badly for many players? This is very good question. See, they are taking the cue, like I mentioned. You look at the trend globally. Things like companies like all majors. Let's talk about all majors, right? they got no choice but to move into alternative renewable energies because I mentioned the net zero, right? They need to divest that and move into that. But for those players, it makes sense. But if you're FPSO or if you're a vessel owner, I don't see the I would say similarity. See, for oil and gas players, it's easy to understand, right? Because you're moving from one energy to another energy source. But for a vessel service provider, getting renewable energy is a totally different thing, right? So honestly, I don't see the logic behind that. Right? I mean, they're just monkey see, monkey do. You know, if all majors do it, let's do it, right? The second thing is, you're absolutely right. If you look at the LSSC, right, large scale solar projects, right? I think the latest was LSSC 4. Malaysia means this is a 4 LSS 4, right? So LSS 4, large scale solar project 4. If you really look at the numbers of those successful bidders, their IRR is a single digit IRR. If you look at the previous large scale solar bidding, right, at least they are still around double digit, maybe plus minus maybe 12 to 15% IRR to talk about. But the latest bid for this LSS 4, my guesstimate, and these are not public numbers, but my guesstimate is I think the IRR has fallen to around 7 to 8%. Guesstimate, don't hold me for it. At this kind of IRR, right, it's actually very risky, very hard to make the money out of it, right? So you're right that it has gotten very competitive. It's actually quite hard to make money out of it. That's my take. Okay. Oh, Bitcoin, interesting. Ethereum and XRP rebounded recently. You know what drive the recent rebound after sell off a few months ago? I'm going to give a very unpopular question. You see, when you buy into, let's take a very fundamental basic difference between investing into the share market or companies and investing into Bitcoins, right? Or cryptocurrencies, to be more exact. When you invest into companies, the underlying asset is a business. So for you to determine how much the value is worth or the share price is worth, you can analyze the business. Whether is it a very good business, a business that you like or you don't like. You can actually analyze the management. Is the management capable of running this business to grow it further, or so on and so forth? You can actually decide the value. Is the share price now make sense or doesn't make sense? The tricky part is when you try to go into cryptocurrency. What is the underlying thing you're analyzing? I think the challenge is there's no underlying thing for you to analyze, right? I think, like it or not, I think people may hate me for saying this, right? Cryptocurrency prices simply move because of demand and supply. That's it. All you need is Elon Musk to actually tweet that he's buying this thing and then poof, the share price will go up. And then next day, if he just tweeted that, no, he's selling it off and then poof, the share price will go down. Because there's really no underlying asset. Because the underlying asset underneath all these cryptocurrencies, right? They are really more of a trading product, sentiment, liquidity, fund flows, so on and so forth, right? So it's very difficult to determine what is the value of it, right? But I always say, right? See, people always say that cryptocurrency will be the currency of the future. But then again, there's two types of cryptocurrencies, right? One is a closed and one is open. If you ask me the closed one, yes, that could be the future of the currency. But in terms of an open currency, or open cryptocurrency, see, there's two types of currency generally, okay, products, right? Financial products. One is a product for transaction, or transactional product, or transactional currency. The other aspect is an investable product or investment currency. Both does not make or will not make. Okay, because you see, for it to be an investment product, you need to have movement in share price, movement in prices, right? You're trying to move. Because if I now ask you, if I'm going to sell this product, it's worth 10 ringgit, and the price is not going to move, it's going to be 10 ringgit for the next 5 years, you wouldn't invest, right? So for it to be an investment product, you must have an opportunity for share price to move. Whereas on the other hand, if it's a transactional product, you don't want the share price to move. For instance, if now I ask you to use your Bitcoin to buy durian from me, right? And if you believe Bitcoin price is going to go up, you're not going to give me your Bitcoin to buy, right? So both will not meet, because if suddenly, say for instance, Bitcoin becomes a transactional currency, you will cease to have volatility in price. But when it ceases to have volatility in price, it will cease to become an investment product. So people not buy. So you can see why both does not meet eye to eye in that sense. Right. So I hope I answer your question, Sunny. How do the banking sector or XPMDS Najib has given some advice previously, like request our local bank to continue monitoring and give some help to jobless people by launching ICE5. See, I think a lot of people got a misconception of this moratorium. Moratorium is not a waiver of your installment payment. Moratorium is simply a deferment of your payment, right? So while it's under moratorium for 6 months, the bank will still account for it as an income because it is not a waiver. It's just that I'm allowing you 6 months, but 6 months I'm still allowing you to charge. I add another 6 months to the bank, right? So that's why I look at in terms of the bank's last year's the bank's performance, right? A lot of people are expecting very, very bad performance coming from the bank because of moratorium. But if you really try to trace back the bank results, it did not happen. In fact, bank actually performed quite well last year, right? So this is the reason. So moratorium don't really have a negative impact on the bank income statement. Let me rephrase that. In fact, if you look at another way, right? Bank moratorium is actually beneficial for the banks. Why? Because had not been for moratorium, your non-performing loan or the NPL will actually shoot up, right? So a moratorium actually allows an improvement or to reduce the risk of NPL of the bank. So actually, I come from a very different perspective. I think moratorium is actually good and healthy for the banks. Yeah. Well, I need to do my advertisement, right? So again, for those who just joined, allow me to do my advertisement. Ultimately, this is what all this purpose, this session is for. As I mentioned, this is a 2-in-1 session. It's like the olden days where, you know, the game show in the olden days in the 1990s, right? Where we actually start to raise funds doing the show, right? So we're actually doing the same thing, and this actually to fund our provision project. If you look at this, our Facebook, for those who want to see, all our activities are posted here, even our distribution, how many families we have distributed is all accountable under this Kriya Lakshmi Mandir Facebook. And as of 16 August, this is a screenshot of our post. We have delivered to 37 families in August. And for the last 2 months, actually, we've actually delivered to 1,058. And unfortunately, we have out of funds. So thus, this session is being created. We really need to raise funds to actually continue this project, or else we are already putting a stop to it at this moment. We're still getting quite a lot of requests for it. Yes, now you may think that economic have started to open, but you see, you still need at least a month before these people can get some income out of it. So we still got another month to actually help them to tide through it. And we still got more than 100 over families requests that we actually need to help. Yeah. This is the packing of the things. And look at it on the right hand side, those are the items that we have packed. Each family will get provisions worth up to 200 ringgit, including rice, you see at the back, washing powder, oil, milk powders, oats, bihun, and things they can actually cook at home for them to actually survive for a month. Yeah. And this is what we do during the distribution. People actually come, we actually have a pre-list, we actually interviewed them. So when they come and collect, we tell them what time to come and collect. Then when they come, we actually check their ICs before we pass to them. And these are all some of the recipients so far. And again, these are the bank account details, right? And let me check. And so far, thank you for coming. We have actually raised, thank you so much. We have actually raised 12,338. But really, thank you very much. But do keep coming. You can really help more people with this. Okay, now commercial time over. Let's go to the next question. So let me create. Let me see where I lost. Okay. What do you think of global small crisis that's going to happen in the near future? Okay. Analysts, we are all analysts, right? So we all have very different views about things. So ultimately, it's not about who is better and who is smarter. It's just a different perspective, right? I do agree that sovereign debt is But for the record, I have high respect for that for the other analysts who actually views that the sovereign debt crisis is going to be an issue. Really, I respect him a lot. He's a close friend of mine, and I really respect his analysis of what he's doing. Just that being analysts, right? We may not agree sometimes on certain things. So my view is, yes, the debt is actually a very big issue globally. But you see, there's always two sides of a balance sheet. I think people must come to think. See, a country is like a company, right? Whatever as liabilities that you have is always balanced by your asset, right? So when I talk about sovereign debt crisis, right? When I talk about countries, when they issue a lot of debts, there is a counterpart to it, which is the asset, which I think a lot of people don't really get it, right? Because the balance sheet has to balance. Right? If you look at the experience I mentioned, 2014 to 2019, if you remember I mentioned earlier in the show, right? The US have been able to actually unwind gradually the quantity, the balance sheet that they've built up during 2009 up to 2013, without most people talking about it, even in the media, right? For 5 years, gradually pushing it down. So my take is, I think it's a concern. I totally agree. But I think what differs is that my view is that the government have the ability to actually gradually reverse their position and not to cause a very, very big shock to the market. So in terms of the risk, I agree. There's a risk. But I think the only thing that differs is that I believe in the government's ability to slowly unwind their position. And I hope that answers. Yeah. Plastic packaging just released a very good quarter. Yeah, it is. And I need to give a shout out. If you look at the slide just now, the plastic packaging that we use, right? Okay, environmental thing aside, because we need the strength. It's actually sponsored by SLP Resources. I approached Mr. Kelvin Kaur to actually sponsor plastic bags. We need it for the project. So the plastic bag you see in the picture just now, I'll put it later. A sincere thanks to SLP Resources for contributing the plastic bags. Plastic packaging just really a very good quarter. I don't think is something surprising. Again, for those who have been following our panoramic view session, we've actually did highlight a few times that plastic packaging is going to be a very good period this year, right? No matter who you are, right? There's only a few. I'm trying to avoid naming names in this session because I don't give stock recommendation, but I've been commenting. I'm trying to be sensitive, very careful with my words. I've been commenting that plastic packaging will be doing very well, not only this year, but I think this is the period where they'll do very well. What do you think of manufacturing exporters in general? Speculate potential benefit from weak ringgit and foreign labor issues and foreign intensive companies. I think the biggest challenge for exporters is freight rate, right? I remember in January we have a market outlook session. That time the freight rate has already gone by 4 times, from 2020 to January. And from now, as we are talking, compared to January, 7 months, freight rate has actually doubled again. Why? A lot of factors I explained in the January session. Port efficiency is low, right? Because of all this lockdown, so on and so forth. Not only in Malaysia, globally, this is a global situation. So that's the first problem. Second, you have containers, because efficiency is low. You have empty containers being stuck in certain parts of the world, right? Which are not free up. Philippines in particular. There's quite a lot of empty containers stuck in Philippines, not able to go out. That's the second problem. The third problem is, of course, the route, right? Some containers are totally focusing on lucrative routes or high volume routes like China to Europe. So a lot of vast containers actually move up to that direction. So that will actually take up a lot of supply of containers in other places. And the fourth, of course, is your shipping lines have actually consolidated or what's the word? Form an alliance among themselves, which deliberately reduces the supply, which again forces the rate to go up. So the biggest challenge to exporters, I think, is the freight rate at the moment, because like it or not, they have to bear some of it, because the way it's going up is too crazy. So that might take about the biggest challenge for exporters. Freight rate, I think, is the biggest challenge. Not so much of demand, as I mentioned. Again, except for Malaysia, it's a different story, right? I think globally, you're really starting to see recoveries happening, right? In terms of all indicators. If you track the US retail sales, home sales, blah, 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 etc., is already showing a very positive recovery sign that people are actually starting to reopen. So demand is not so much an issue, but I think that the cost of freight is actually a bigger issue. Asking about CPO sector, I've mentioned earlier, but you can do watch the replay in the earlier session so that actually I can keep time to actually answer other questions. From Datuk Michael, thank you very much, Datuk. Thank you for the donation. What merchants you have found which are the top 3 merchants? Why? Okay. I'm mainly in the mass market. I can't afford premium like you, Dato. I can't afford a Rolex. I can't afford Patek. I can't afford all those brands that even I can't pronounce. Right? I don't recall Patek Philippe or what, things like that. Right? I'm mainly a citizen. I'm more of citizen. Second is Seiko and third is Orient. And more of those. And these are all very affordable range. When I say affordable range means it's still three digit, not 4 digits, still 3 digit range. Yeah, so that's how many watches, honestly, I lost count. I am unlike you, where you're more on watch investment, where you appreciate watch that is nice and you increase in value so that you can actually, I mean, honestly, no Dato Michael is an expert in watches. So if you want to know any watch that can go up in value, he's the person to ask. Right? That's why he owns this Facebook called Watch Investment. You all can follow there. But I'm not in watch investment. I'm more of liking watch because I like watch. In the sense, I like the aesthetic of it. So unlike him, most of his watch can make money. Most of my watch will lose money if I ever sell it. So that is very different. Yeah. Thank you so much, Dato. Talk on time involved around Pengerang. Hope we can have a dialogue. That's a very smart way of doing it. The Pengerang company's business is really more of a storage business. Okay, remember back to the earlier questions, right? Some of the businesses really depend on the nature of the business. Storage business is actually more stable because it's rental, they charge for it. And for dialogue, you'll do some reading about it. Okay, let me rephrase it, right? For the company in Pengerang, you'll do some reading about it, right? Not only the customers pay when they put their oil there or they store their oils there, but when they take their oil out, there's also a charge there, right? So that's why their nature of business is actually very interesting. But of course, on the other hand, the PE is also very interesting. The valuation is very interesting. That explains that. So there's also both sides of the equation. Yeah. Thanks, Bradley, for answering a very indirect question, which is very direct. Yeah. Okay, James. Back to Perak Transit. Sustainability project facilitation fee has contributed sustainably to their earnings. There was a interview session that I've conducted last year with the CFO, with the CEO, with all their directors are there. No, this has always been a very key hanging issue, right? The project facilitation fee, or in the very more layman term, jargons aside, is consultation. I mean to say, they'll actually consult other bus terminals on how to operate and how to improve, so and so forth. There's always this question about the sustainability of it because it's a consultation, it's on a project-to-project basis. And if I remember correctly, I'm just paraphrasing what it was communicated, right? When they counted the number of bus terminals which they're advising now, as opposed to the total number of bus terminals in the country, I think as of last year, they're only at 10% of it. Right? And of course, they are quite realistic. They're not aiming for 100%. It's impossible. I think they're aiming maybe for 20-30% of it, right? Because this is project. You go, come. Once you complete it, you drop. And the direction is why the Kampar terminal is important, because once the Kampar terminal income starts to come in, even when the project facilitation or the consultation fee drop off, it can actually leverage to stabilize the revenue base. So what they are trying to say, I must rephrase what they're trying to say, is that yes, they recognize the fact this consultation fee is a kind of one-off per se, but gradually as the Kampar terminal's contribution come up, they will actually start to mellow down on the consultation, and you'll be really a more recurring kind of business model for them. I hope I answer without answering. Yeah. Your wall every 6 months also change in color, is it? For the benefit of viewers, or else imagine, right, you all every month see me, it's always the same wall color. I think if I have an attractive face, it's fine. The problem is I don't even have an attractive face. Imagine you have an attractive face that you have to look at and listen to, and you have the same wall looking for the next 6 months. So for all your benefit, I change my wall color. I paint myself to be for the record also, right? Yeah. Can you wait? Leaching. Okay. Car manufacturer issue a short-term 6-month supply contract. Okay, I won't comment about companies. I say I'm trying to avoid that, but let me comment about industry practices. I think I am able to do that. If you look at it, right, when auto global supply companies, when they give a business, they don't just give you per se. What they actually look at is they actually try to look at what is your capacity. So they'll look at your capacity and they'll actually award you a contract based on your capacity. As your capacity increase, they'll come back and review, okay, now this is your capacity. I'm going to give you another contract which the quantity will be higher based on your capacity development. So I hope that answers your questions, right? That's how actually it works. So why this is a short term? Because to a certain extent, the capacity is gradually increasing. So you're going to see quite a change in capacity as we are talking, or even the next few months, right? So that explains it. Is it you or the echo is quite bad? I'm not sure. I can't hear myself. So sorry about that. Yeah. Okay, now it's 9 quarter, every 15 minutes update. So I hope. Okay, we have raised 13,546 again. Sincere thanks to all of you. Do keep questions coming in. Again, do keep donations coming in. Thank you for that. Yeah. Wait, let me find a question. James again. Okay. Construction stocks before, where share price is driven by speculation on job orders. Having said that, construction stocks, included big players, have been beaten down a lot during MCO. What's your view on the sector? You're right. Construction companies are usually the sector which I avoid. Not because of anything, because I don't drink. Let's face it, right? Construction sector is a news flow driven sector. You need a lot of news flow to know. You know there's this term, right? Buy on rumor, sell on news. It's very applicable to construction companies. Usually, the price run will happen before they announce. So notice it's always a very common trend, right? When people say, "Oh, they're going to get the project," the price will actually run up. But when they start to announce, "Yes, I got the project," the price will actually drop. And for that reason, I don't do it. Why the price has been going up? You look at it, it's not so much due to MCO, but if you take a look at it, most of the major projects mega projects have already been announced before 2018. That's why I noticed after 2018, right, there's really no major projects to be announced, no new mega projects to be announced. In fact, it's a reversal. Some of the projects have been cancelled, like Bandar Malaysia, for instance, right? Nobody really wait for construction companies to deliver the earnings. Because construction companies never about earnings. It's about winning contracts. So now is a period for construction companies to start delivering the projects or to start implement the projects, right? So that's the reason why between construction and building materials, I'm more keen on building materials because as you start to build that, it's actually better for the building material companies. Investing is all about buying future cash flow by Tuan Yongping. You agree? How do you define yourself about investing? If I were to rephrase that, right, my perspective is investing is about cash flow. Right? I will not look at future per se because future is always a guess. Between historical cash flow delivered and a future cash flow, I will actually put more weightage on what has been delivered before. It's all about margin of safety. Because if you try to predict a future cash flow, your prediction is as good as my prediction, right? Nobody knows. So when investing, what you're trying to do is you're trying to minimize uncertainties. The lesser uncertainty, the lesser guesswork you have, the better it is. Right? So I would say my view will be more on, yes, investing is all about cash flow. I wouldn't look so much into future cash flow because, not to say zero, but between a weight given between historical cash flow and future cash flow, I would actually put more weight on the historical cash flow. Yeah. Okay. Let me good citizen by KF John. uh, poor man's watch. Call it out. How accurate is a country's financial figure, GDP, debt, money? I think actually being monitored and check balance, or just account balance that nobody really cares. Again, it's a good question. I think if I have to rephrase it right, as a normal citizen, you don't know how to audit, or we are not able to audit. We're not able to actually access to the accounts. Generally, there are some period where it can be questionable. There are some period, right? And for some countries, it can be questionable also. But I said that there's no way for you and me to actually verify that. Yeah, that's a very good aspect of it. Yeah, correct. We have just to take whatever is reported as good, right? Fortunately or unfortunately. Vintage citizen is way better than watch the Seiko watch. Good choice, Seiko. What to do? Poor man's watch. Let me see what other message. Wait. Stop again. What do you think of Untitled Chapter, Kajai, Prospect, and GDP, all construction contractors? Is it good time to get exposure? See, I'm just trying to explain why it's important to understand businesses. The names that you name, although they are all generally said they're all construction contractors, but they are all in a very different part of the value chain. Although generally they are contractors, right? Take Pintaras Jaya for instance, right? Pintaras Jaya, they are more of piling. They do piling company. And you know piling is always the first start of a project, right? Before you do anything, you build anything, you need to settle the piling first. So piling guys will always comes in first, and piling guys will always get paid first. Because at the start of project, the company still got money, right? You pay the piling guys off. So the risk of not receiving money is always the lowest in the piling guys. You follow where I'm coming from? The riskiest guys is always at the end of the project. Just at the end of the project, right? Most of the time, the cash flow is already gone. Most of it is already gone. So far, if this is a common story, right? For those who are building, whether it's commercial lots or residential lots, some of them are forced to actually take lots as payment because they end the cash flow. So that is it. I cannot stress enough. That's why understanding the business is important. So although generally they are all contractors, but they are very, very different nature of business per se. My take is contractors will be quite difficult because building raw material prices have already started to go up or have been going up for the last 1 year. Most of these projects already been secured, locked in even before pandemic. They are now only delivering it or start to deliver it. So I think they are based on historical price they bidded before the pandemic and based on the current raw material prices, I think margin will be squeezed. So it's really not a good time to be a contractor. I think the margin will be under challenge. Yeah. Let me see. What is my view on CMSB going forward? Jaya Mata Sarawak Berhad. Jaya Mata Sarawak, I think the attraction is that the plus and the minus. The plus, not a buy recommendation, comment on companies. The plus side is they monopolize the cement market in East Malaysia there, right? So as mentioned, right, construction activities go up, they will benefit. I think the downside is always has been linked to being a company of the previous chief minister. So it's always an image issue, but to be fair, they're actually being run by professionals. Although the ultimate owner is always the previous chief minister. They're quite professionally run, to be fair to them. Yeah. And yeah, I think it's interesting because of that. I'm trying to answer as many as I can. So yeah. So as I answer, so please, the bank account is there, so please donate as generous as you can also. Okay, how do I look at the glove vaccine sector, J&J and Moderna? When investigation of the impact according to Israel data, new cases keep rising recently. How do you look at shortage of chips in auto industry? Okay, quite a lot of questions. Let me try to answer. Glove sector, I have been quite unpopular last year. I think starting from July last year, right, I've been giving warnings about glove sector, where I think that it sounds unbelievable at the time, right? Where I caution about the ASP, that the average ASP or the average selling price of glove which won't be able to sustain, right? It will naturally need to correct down once the pandemic is over, right? And true enough, you look at it, ASP started to fall starting from June, July, depending on which company you're looking at. Starting June, July, the ASP started to correct. To give a perspective, how far it will correct. Before pandemic, average, I think per 1,000 pieces, average, let's take the average, is around $20 over. At the pandemic, it goes up to around some on the order basis, invoice basis, go up to around $80 over per barrel. On the spot basis, it can even go up to $120 to $120 per 1,000 pieces. Talk too much about oil, right? Okay, now the question which nobody has the answer to is once all this stabilizes, what is the new normal price for glove, or what's the new ASP? Right? Because we're talking about a very big range, right? You're talking about just the average between $20 per barrel pre-pandemic to say $80 per barrel. Sorry, per barrel, okay, per 1,000 pieces. I need to stop talking about oil per 1,000 pieces. Okay, now assuming if you're very optimistic, say, well, the new normal is going to be $40 per 1,000 pieces. It's still double of $20 historical average. But bear in mind, from $80 to $40, that's a 50% drop. If you're less optimistic, but you're still optimistic, say it drops to $30 per barrel, $30 per 1,000 pieces, which is 50% higher than $20 per 1,000 pieces. But don't forget, from $80 to $30 is still a significant drop. I think the only thing that's, I won't say only thing, the biggest uncertainty is what will be the new ASP. And honestly, nobody knows. Right? So until there's more clarity on what is the new ASP, I think that's where more visibility can be seen and you have a more idea of how much is going to be the sustainable profit going forward. Until that has been seen, we haven't seen that yet. And it will accelerate because there's a lot of players coming in also. So the competition for glove has actually increased significantly. We're not only talking about Malaysian players, Thailand players are also increasing capacity substantially, and also even China on the nitrile, they're also increasing capacity substantially. So to me, glove is definitely on the downtrend. Vaccine sector, J&J, Moderna, it again depends on which company. Pfizer is on a pure profit basis, whereas for other companies such as your AstraZeneca, they will only make profit once this pandemic is over. That's all your percent. I think sometimes it's always like, there's this saying, right? Never go to your barber and ask if you need a haircut. Luckily for me, I don't have to ask that question. Right? Because definitely barber said yes. So likewise, right? If you ask the vaccine companies or the vaccine makers at Pfizer, do we need a third shot, booster shot? I think the answer is obviously yes. I mean, Pfizer wouldn't say no, because why not? This additional one shot is another 50% jump in the earnings. Right? Virus may be mutated, even with vaccinated. See, even if you're vaccinated, it's not 100% guaranteed you're free from it. Even if you look at even the best data, you're 80% safe. You still got another 20% chance of getting infected. That's number one. Number two, the importance of getting vaccinated is because so it's also not so much about getting infected by COVID. It's also about how severe do you get sick once you're infected by COVID. You see, or the ICU rate. So another purpose of vaccine is you can get infected, but it actually reduces the severity of the symptom that you have, that you wouldn't get into ICU because of that. You see where I'm coming from? Right. So this, I think we need to get all these things understanding right. So vaccinated is not a guaranteed get out of jail card for life. No, it's not. It only reduces your risk of getting it, and if you were to still get it, it reduces the severity of it. What do you think about shortage of chips in the auto industry? You look at, I think it was today or yesterday, Toyota just announced a 40% production cut in one of the plants. Right? It is definitely affecting the auto industry, for sure. Some autos have taken a more drastic approach, like Peugeot, or we call it Peugeot, right? I'm just saying it's Peugeot or Peugeot. Right? It's Peugeot, for instance, they actually announced that some of their meters, they actually convert back to analog meters, so that they can actually solve the chip shortage issue. Right? So it's definitely hitting the automakers. That's for sure. How does it affect the local car market? Again, I think this was in, May or June issue. May or June panoramic session. We actually had 2 sessions to talk about the auto industry, right? The prospect going forward. Again, the auto industry, there's a very big value chain. Even the name that you name here, MBM, APMB, although they're actually same auto industry, but they're actually very different in terms of business nature. Again, you can go up to panoramic view, Trident Analytics view, look, I think it was a May and June session. I can't remember. I think it was May or June. You can find from there. Okay, last 2 months production has been halted. Even companies like Produa, Proton, their factories actually closed. And in the lockdown, we can't buy cars. Right? So definitely don't look at optimistic numbers there in the short term. But going forward, my take is some companies will do much better than the others. But if I say more, I'll be like recommending stocks, right? But do view that session. Yeah. We actually go into quite detail in that session. Yeah, so I hope I answer most of your questions. Okay, let me find another question. Okay, now it's 9:15. Let me check. Updates on amount being collected. Thank you, all of you. We have collected 14,296. Thank you very much. Thank you for kindness. So do keep the question coming. If really worst case, I was just about to say worst case, I need to sing to get donation. don't go there, please. Okay. Don't force me to sing. It's very bad. No, very bad for you guys. Right? How will you judge the quality of management if we don't know them well? What kind of indicators of past performance will you look for? Okay, there's a lot of aspects you can actually look at. Okay, be it quantitative and qualitative. Right? Let's say quantitative is very obviously. You look at their business performance. Have the revenue been growing? When it's growing, right? Is it organic growth or acquisition? Right? If a company keep on growing by acquisition, it sends a very different perspective compared to a company that's able to grow organically. That's number one. Number two, what is the profit margin compared with their peers? I always say, no, a standalone number doesn't mean anything. We can compare the profit margin of this company by itself, but it doesn't show anything. But you must compare with the peers. Has this company's profit margin continuously always higher than peers, or are they always lower than peers? So again, that gives you an idea of what is the quality of the management you're dealing with. Then also look at sometimes during interviews, right, or media interviews, or you can sense the tone. The tone I'm very sensitive about is whenever the management talk about share price, I'm quite sensitive about that. In a sense, to me, if you are management of a company, you shouldn't be bothered with share price. You should be more bothered about running your business. So if the owners talk too much about their share price, to me that I'm a bit, I don't know what to call that word. I'll get a bit worried about that. Right, so there's still a lot of indicators. You can just read of what they do, what they've been going. Under difficult period, how do they perform? So that also is an indicator of what is the quality of management that you're actually dealing with. Yeah. So there's a lot of parameters. Actually, you don't need to know the management to be able to. In fact, sometimes if you know them, you actually cloud your vision even more. So sometimes being able to judge on as an external party is actually much better than getting to know them. Yeah. Can they? When China government quote the data for GDP, etc., US is the same. Well, I will say there's no way to verify it. But sometimes when your GDP growth is too smooth, I mean, it becomes a bit suspicious. I mean, who is able to manage the country? It's like if I tell you you're able to manage your company's profit margin smoothly, or you're able to actually manage making sure every year your revenue is able to grow 6-7%. I don't know. It's your guess and my guess, right? It's not easy. Whether any view on current upcycle of steel and tin prices, no uptrend will sustain the next 12 months. The biggest I call about steel is always China. See, let's take why the steel price has been going up, right? China is the reason why the steel price has been going down in the first place. And because of a lot of activities in China, they have turned from a net exporter to actually stop exporting, because there's a lot of construction activities, infrastructure projects within China that's using their own steel. So that reversal of being an exporter to consumption and even importing, that actually bumped the price. That's number one. Number two, because of all this green, the carbon credit concept, where steel is a very pollutive environment, pollutive business industry. So they have to buy carbon credit from Europe or from other people to actually operate. Right? This is another big topic again, which I'm quite against carbon credit. But that again, I think that's another story. Right? So that increases cost of production, and then again that also increases the steel prices. Okay, so China is always the reason behind that. But on the other hand, see, when things go up, costs got way too high, where it starts to hurt China. China being China, they're always able to actually implement policies to actually taper down the prices. Right? So it's really at the mercy of, in that battle, it's mostly at the mercy. The steel prices is really 100%, really depend on the Chinese government's direction. Right? But when the price go up too high, by starting to hurt them, they will do something to actually normalize the price, to actually taper it down. But on the broader, excluding this element aside, there's definitely a lot of economic activities in China, and actually the steel demand there is actually quite strong in China. I hope I answered the question. If I answer generally, right? Again, if you talk about raw material prices, it really depending on let's talk about business per se, right? When your raw material prices is high, it depends on the demand, right? If your raw material price can go up, but if the demand for the product is strong, you're able to pass it on. You see where I'm coming from? But if your raw material price is high, but the demand for a product is low, you have to absorb it. So whether a company is affected by the raw material prices, it's not as simple where if your raw material price is high, you're getting hit. Your price is low, you're benefiting low. You have to take into consideration of the demand and supply. Remember, that's why I said you must be able to control two things. Either you must be able to control your selling price, or you must be able to control your cost. So this is where this analysis comes in, right? Freight charges, definitely exporters are being hit by freight charges. I mean, that no doubt about that. Right? They get hit into their margin, can be quite badly in that sense. Yeah. I hope your questions, right? What's my view about money lending company, Aeon Credit and RC Capital? This one, somehow, if you look at it, they are usually it's interesting business. I call them for a joke. I call it legalized along. I mean, they are along with a license. If you allow to get, and their interest rates are not cheap. But that being said, it's interesting, but somehow these companies, their valuation wouldn't go as high as your normal banking valuations, because they're still being regarded as a secondary per se. Let's look at RCE or even in terms of Aeon Credit, as good as their record of their performance. They usually won't get the valuation as compared to the full-fledged bank valuation. I think that's the unfortunate part we have to accept. That's how the market priced them. Yeah. Recently, a young fellow appointed at BJ Corp could announce major coming structure in BJ Corp. Is credible? Can he deliver? In my former CEO of PNB was sort of kicked out. I can't comment about it, but I've always said this. Even many years ago, I think to restructure Berjaya Corp, I'm being very honest, I think even the senior management or even the director of Berjaya Corp actually knows what to do. It's not a complex company where they're not aware of what to do. They need a third party to come and advise them what to do. Right? I always believe that even the directors or even the owners, they are aware of what needs to be done. But sometimes, unfortunately, being a large organization, you need a third party to come and do it, so that the third party can take all the hit and just do it. Whether can it deliver or not, I think it's yet to be seen. Again, remember I caution, right? If somebody talk too much about share price, I'm always a bit worried in that sense. And unfortunately, he talked too much about share price. So I'm a bit cautious about that. Yeah. What's my thought about Burma's auto? A lot of answers is actually given in detail about this in our June session about auto. I think it's June session about auto. And the management is actually quite well run. I mean, they know the business. He's what's the word again? He's an old guard in the industry. He knows how to market cars. Right? Selling cars is not as easy as just selling cars. Right? He knows how to position the whole industry, the whole dynamics. And honestly, I'm quite positive about their entrance into Peugeot and Kia distributorship, simply because it's a very low volume, or it started at a very low base. So at a very low base and decent cars, so when you have a very low base, it's actually quite easy to pump it up. So long and short, I'm quite optimistic about the new ventures in that. What are my thoughts about EV-related stocks, Genetech and Gridtech? Ultimately, it's about valuation. It's what valuation you're getting. And again, rather than we try to categorize them as EV, right? Understand their business. What are they actually doing? And what are the exposures to them? I think they really need to understand this. I said, remember I mentioned before, when the oil and gas was very hot in 2012, 2013, everybody just categorized themselves as oil and gas, even when they're just a service provider to oil and gas. So this EV is hot now, so everybody is actually announcing now I'm related to EV, but do spend some time study the business to see whether what is their exposure to the EV or how are they exposed to the EV. I think that's the advice I can give for investors. Yeah. For business publication, Barron, Bloomberg, and Financial Times, which one is your choice and why? I'm always Financial Times, even since my uni days, so very, very long time. I find the analysis or the journalistic qualities actually much better. My second preference is actually Asian Wall Street Journal. Actually, these two, and the third one, if you ask, is actually Fortune magazine. So these are the three things that I read. I don't read Bloomberg. Sometimes it's too. I think sometimes the analysis is not as in-depth as Financial Times or even Fortune. And me being a suspicious guy, I think always there's something, Bloomberg being Bloomberg, right? There must be some intention behind there, so on per se. Right? I don't trust them that much, unfortunately. Independent reporting, I think that's the word I'm looking for. Right? I think, among all, I think Financial Times is actually quite independent in that sense. That's what I quite like. And Fortune is also quite independent in reporting. I don't even, sorry, I can't even read. I'm a banana. I can't even read what you want me to sing. Sorry. Thanks for agreeing. Yes, management should focus on managing the business. Once they start to talk too much about the share price, that is a red flag that you should be more worried about. Let me find more. So, investing in stock and funds are different. What are the things we need to pay attention when we invest in fund rather than just take advice from those fund agents? Ask a few basic questions. Right? Who is the fund manager? How long have this fund manager been managing this fund? What's the track record of this fund manager? What's the fund is? So, because ultimately, what makes the fund perform is actually not the name of the fund. It's not what the theme of the fund. It's not what the objective of the fund. Like it or not, ultimately, it's the fund manager behind. I think most of the time you notice why suddenly there's a change in performance, whether upwards or downwards. It's actually at the back. There's actually a change in fund manager. Right? So always know your fund manager. Who's the one that's managing the fund before you invest into the fund. If your agent doesn't know, they have to answer that for you. Right? I mean, make sure that it's good for the agent also to actually know who's managing the fund. So at least they are able to convince the clients or give more information to their clients on a much better basis. What do you think of IT companies that rely on government contracts such as my agent that does on it? Again, I always avoided companies that rely on government projects, not my investing style, because I don't want to guess who will win, especially in this period, right? Whether is it this or this, right? I always steer clear of companies where they need to get government projects to perform. I will always invest in companies where they rely to survive themselves. Right? This is what I prefer. I see MyEG and Datasonic again is very different. Right? I always think, to be fair to MyEG, right? You look at the difference, very simple, different, right? Take Datasonic, they are bidding for government projects, right, to actually deliver. But you look at MyEG's business model, they're actually not getting revenue from government. They're getting revenue from people like us, when we pay for their service, right? When you want to renew our road tax, we do it through their platform, we pay them. So to be fair, their business is actually not coming from government. Yes, government give them the access into the database, but their actual revenue comes from providing real services to the public. And is it excessive? I don't know. I find it's quite reasonable. In fact, I started using MyEG as early as 2012. Because to me, it's convenient, right? You just click, I pay 8 ringgit, they can deliver things to where I am, road tax. I don't have to queue in post office. So I wouldn't say MyEG's business model rely on government. In fact, I quite respect what they do because their income actually comes from providing service, and they do provide quite good service, not some 6:30 kind of service to people. Right? So again, it's actually very, very different. Our new government will prevent a total lockdown since our beloved ex-PM Najib has advised our government to have full lockdown to avoid COVID-19 go haywire and kind of element is back. If yes, I don't think so. Like I said, there's always two numbers to look at. Yes, our daily cases is 20 over 1,000, but another number, I think, contracting is one thing. But I think what was giving the pressure to our healthcare system was the ICU cases or the severity cases. So some positive development from the vaccination is that, yes, although our daily cases are still high, sorry, but the number of ICU cases actually dropped. So actually, the stress on our healthcare system has actually reduced. So that's why I said there's always two numbers to look at, not so much on daily cases alone. Yes, daily cases we have to focus, but the stress on the healthcare system is on the ICU cases, on the severe cases. So the bright spot we're seeing now is actually the severe cases actually dropped, which also thanks to due to the vaccination. To be fair, credit have given when it's due. At 400 to 500,000 vaccination a day is actually quite impressive. It's actually one of the highest in this region. So I think credit must be given when it's due, right? I think the previous minister, not the health minister, the previous minister in charge of vaccination is actually doing quite a good job, to be fair to him. Yeah, let me try. What can come at chronology and secure metrics in Malaysia can benefit from entire intelligence process? Our segment always be dominated by bigger foreign players. Can implement companies be move out of foreign? Again, focus on the business nature. Always ask yourself, see, what kind of business? The first level of business that you'll ask is it a project-based or is it a recurring business? Right? As an investor, sometimes you actually prefer recurring business because there's more certainty to the income. But if it's project-based, you really have to depend on getting a lot of new projects, right? To actually keep on, it's just like keep on bidding for new projects and new projects and new projects, right? So that part is important. Back to the basic thing I always keep mentioning. Always understand what is the business of the company that you don't invest in. Yeah. Okay, now 50 minutes, 9:30. Let me check. Good news. Well, thank you very much. We've actually hit 15,000. 0015006. Thank you very much. Do keep the questions coming. If you really need me to sing, I can bring the rain down. What is the view of furniture sector? Furniture. It will be a low valuation sector. Throughout the years, valuation of furniture sector will always be low. I think because of the volatility of the numbers, right? You can have few quarters very good numbers, then suddenly one quarter to surprise you on the downside. So because they are not able to actually you really hard to find one furniture company where they can consistently deliver consistent growth in earnings and earnings for you. And of that volatility of earnings, I think that's one of the biggest challenge for them to actually get a good valuation for the furniture companies. Right? So that's why explains why it's hard for furniture companies to actually have very good value out of it. Given high valuation of local may do foresee a sharp correction in the near future, similar to if in growth during pandemic and after. Early this I've already warned about the tech, right? And subsequently there was a correction in March. What is my take now, right? I think is expectation. I think the keyword, I stressed many times, right? I think the challenge for this year is always expectation. Okay, what I mean by expectation, right? Say for instance, if I give this example many times also. So assuming now you're going to pay 100 times PE for this tech company because you expect the profit to double, to grow 100% also. So you think to yourself, right? If it goes 100%, my PE of 100 times will become 50 times. Correct? Okay, so that is your expectation. You buy into it. Okay, now what if when the company actually delivers the numbers, it grows by 80%? And 80% is still an impressive number to be able to grow 80%. But now your expectation is 100%. So will you be rejoicing, celebrating, or will you be disappointed? Because you expect 100 times, 100% growth, but it delivered 80%. So a lot of this euphoric situation is expectation. So I'm not questioning the ability of the tech companies to grow this year. I agree they would still do very well. In fact, one of the better performing sector or the best performing sector would actually be the tech sector. But I think the biggest challenge is, has the market expectation on the earnings deliveries became too high or became too irrational? That when the company fail to meet those expectations, what is going to happen to the valuation? I think that's my take on that. Yeah. China and expanding a semiconductor industry, the boom has made Malaysian companies. How can it sustain? Which, okay, I directly answered. Okay, actually, this expansion is not recently. I think a lot of, if you really track this industry closely, right, actually, this expansion even started before 2018 trade war, or so-called trade war by Trump against China. This capacity building actually started in 2016, even before that. So it's actually gone through a very, very long boom. In the lack of a better word, they call it a long boom, 2016 until now. Right? Is it going to stop? Answer is no. Right? I think this capacity expansion will last another 3 to 4 years. Right? That's my thing. But again, back to the early answer I've given. Right? There's no question that this is a boom. The demand will still be there. But the risk is expectation. If the expectation become overly too unrealistic by investors, so when the company deliver the actual numbers which fall short of the expectation, then you can actually expect a correction. Yeah. So think of retail industry at Padini in nature. As I mentioned, price always perform in advance. Now share price recover to 2019 level, just yet to recover. I'm thinking of how to answer you. Right? See, again, in nature model and Padini model is again quite different, although both belongs to retail industry. Right? Padini was hit last year definitely because they are more on storefront sales, right? Your Vinci, your Padini, your what's the other brands outlets, right? So storefront sales are definitely being affected, right? But once it recovers or once opens, right? Definitely this one will gradually recover, right? So that's on Padini numbers. In nature, business model is a bit different, right? They do push quite hard into, in the lack of better word, online/MLM or word of mouth kind of business. That's why look at they're still able to deliver quite good numbers even despite the lockdown. So both are retailing, yes, but notice both business model can be quite different in that sense. Investing is very peculiar, right? You know, like what they say, right? When you buy insurance, right, you find that agents will only sell insurance when you don't need it. When you need it, nobody's going to sell to you. So likewise, when you start to invest, right, you always invest with the disclaimer, the good companies. You always invest in the good companies when the times are challenging. But because these are solid companies, when the times reverses, these are companies where they go reverse itself. So you must have the reverse mindset. Good company disclaimer, it only applies to good companies. Dodgy companies excluded. Okay, for good companies, only invest, or your best, let me rephrase it, right? The best time for you to get a bargain is when times are bad, times are challenging. That's affecting them. Because once they recover, they are going to be the one that's going to do well. Right? So this the mindset that if you are a long-term investor that you must have, right? Or a value investor that you must have, okay? Or whatever term that we have used. Yeah. If anyone still have questions, do come in. I can still answer. While we're answering, let me check our latest number. We have raised 15,506. Wow, it actually surpassed my expectation. Thank you very much. Again, if for those who have still questions, I'll be happy to actually continue to answer questions if you still have. Yeah. While waiting for that, I'm not sure. I've mentioned Panorama Review a few times, and maybe for those who are asking what's Panorama Review, is actually what we do is a monthly. At the last Sunday of every month, we have a market outlook, and this coming end of the month, 29 August, this Sunday, we actually be talking about Malaysian healthcare sector part 2. Part 1 last month, we actually talked purely on glove industry. Why my view is that it's going to be challenging, etc. going forward. And part 2 will actually be focusing on all the other health care segment of the industry. Right? We talk about pharmaceutical, pharmacies, drug manufacturing, hospitals, so on and so forth. Right? So there will be part 2. It will be on 20th August. This coming Sunday, 2 days from now, we're actually talking about portfolio management series part 2. Where this is about building your own Excel portfolio. Right? It's really a course to actually teach you how to build your own Excel portfolio so that you'll be able to track. Series 1 was last month. Last Sunday we had series 1. This now is, session 1, now is session 2. Will be coming from 2 days now. Ultimately is to empower you guys to be able to actually build your own portfolio and own your own portfolio. Yeah, so these are the 2 things that we have. Okay, question. What my view on beer industry? I usually, if for those who know my investing style, I always avoid same stock. I don't invest in gaming. I don't invest in beer industry. I don't invest in smoke industry. Yeah, so apologies, but definitely if things were to open, beer consumption is quite a proxy to that. Yeah. What's my view on insurance? Insurance, there's mainly 2 categories. Either you're a general insurance player, a life insurance player, or both. I mean, most of both, but you have to look at the dominance. Which one forms the bulk of the company's profit? Life or general? General is usually the challenging and the loss-making one. Life is usually the profitable one. So again, to answer you, you really need to look at the insurance company, where they are positioned. But if you look at Malaysia, we always say that our numbers are our insurance penetration rate is very low. Again, it depends on your breakdown. If you go by races, right, in the non-Bumiputra segment, is actually quite high. The low is actually on the Bumiputra side, and therefore, you look at insurance industry, Takaful is where I think the strong growth would be, because it's more catered towards the underserved, under-penetrated segment. They are more inclined to Takaful, right? So Takaful insurance is, I think, is where the growth would be more coming from there. Can you share my routine daily activity? I wonder why I asked this question. For the last 2 months, it's really provision project. Either I go ask people for money, I send WhatsApp messages to people, disturbing them, asking them for donation. I do quite often. For those who know me, for those who have been receiving my endless messages, disturbing them for money, you know what I mean. Sorry about that, but necessary evil, I will do it. Okay, let me rephrase it. It's a necessary good. Then we have to go and buy the provisions, right? To actually go to the where wholesalers buy the sets of provisions, then come back. Then we have to pack the provisions. Then we have to distribute the provisions. So that really is take quite most of my days for the last 2 months. Reading, like it or not, we have to read quite a lot. As I mentioned, Financial Times, Asian Wall Street Journal, Fortune magazines. No blogs. I don't read blogs. Second thing. Third is preparing for the monthly sessions and also some advisory sessions. Sometimes I do have asked to do some advisory work on some projects, so I need to prepare for that. So basically, that's how I spend my daily routine. Quite boring, nothing much. Yeah. FF funds were net sellers from Asian asset Indonesia. Can entice them give? What can entice them back given our PE valuation still high by comparison? This is a very good question. Okay. Remember the earlier chart I showed you that the foreign fund have been selling since 2013, 2011, right? Remember, right? Actually, I was trying to find back longer data. If I were to able to stretch it back up to 2007, the reality is this: foreign fund have been selling since 2008. It's not even something recently. So if we were to able to track from 2008 until now, right? Actually, the foreign have been selling. The question is why? Right? Of course, 2008 conveniently we can say foreign funds were selling because of the great financial crisis in the US, where not everybody exit. But there's a second reason why foreign exit Malaysia in 2008. It's actually on the political aspect. 2008, remember, was the first time that the Barisan lost a two-third majority. Okay, you think about it. You mentioned that Malaysia's valuation has been high. Within the ASEAN peers, right, except for Singapore, Malaysia will always enjoy a better valuation way back then until 2008 compared with our regional peers, Thailand, Philippines, or even Indonesia, because of our political stability, where the two-third is quite rare. You don't see it in Thailand, you don't see it in Philippines, you don't see it in Indonesia. So foreign investors have always given us that kind of high valuation because of this two-third. So when the loss of two-third happened, in their view, there's actually not much difference between us than the other countries because we lost that premium of political stability. So that's why the fund that from. Not to mention, subsequently, if you look at our economic performance rate since 2008 compared with our peers, take Thailand, Philippines, and Indonesia, they have grown very, very, very fast, very, very fast. In fact, I still remember in 2009, I was interviewed by, I think it was, I can't remember which portal. I think they are no longer in existence, right? So I was head of research there, and that time I did cover the ASEAN region. So I travel. I remember every month I was in one country, right, to do my research and things like that. So they were asking about the prospect of Malaysia. So actually, I made this comment, right? I said, if we don't get our acts together, and that time you can see the trend, right? Philippines is going very fast, Thailand going fast, Indonesia going very fast. I said, what may happen is, in 2009, I made this statement, right? I said, what could happen is in the next 20 years, we could be exporting mates. I mean to say, rather than people come here to work, we'll end up going out to work, mates in the work. So it was just a casual comment, right? But I didn't expect that the journalist actually put that as the headline. They said, Malaysia's next export, mates. That really got me into trouble. Got in trouble, that article went to Boss Khoo's office. Lim Kit Siang actually bring this up in Parliament, saying that I said these words. And my boss was a bit sensitive that time. He was worried, right? I technically, because of that, I resigned 24 hours, right? Because of that article, right? Because no, how should I? Because they are a bit edgy about it. Say, hey, you know what happened if the government find fault? I say, well, to give you comfort, right? I'm willing to take the responsibility. It seems I'm the one who said it. I'm going to resign 24 hours. So that cost me the thing. Right? So, and things have not changed. Look at the growth of these countries now compared to Malaysia. I think that they're still doing much better than us, unfortunately. Right? To draw them back, a lot of things need to happen. And I think it's quite difficult. It's quite difficult. But as a local investor, see, all is not lost because all these foreign funds, they will aim for big companies. They go for your big cap stocks. Right? So whether they flow in or they flow out, the biggest impact is always on the big caps. Whereas I always believe there are more opportunities in the mid cap and the small cap space, where there are a lot of good companies there that if you buy them and hold them for the long run, if the management is right, they can actually deliver the long-term result. And big and small cap were never the interest of these foreign funds, right? So that's what I meant by that. I hope I answered your question. Yeah. Can I have a view on F&B industry, Power, Nestle, Dutch Lady? Nestle and Dutch Lady it always boils down to valuation and growth prospect, right? What are their growth? Again, these are very different companies per se, right? take Power Road for instance, right? Power Road domestic, they are quite strong. I think the growth will have to come from the Middle East and the Hong Kong. Right? Nestle is quite well penetrated in Malaysia. Don't expect very strong double-digit growth. You're looking maybe at 3 to 4% growth a year, but the valuation you have to pay for it. Dutch Lady is purely milk, substantially on milk. Again, raw material prices is actually very important for them, which affects the profitability. Market dominance also quite dominant. If you just walk through any freezer, right, you just glance through, right, the whole row of Dutch Lady milk. So for Dutch Lady, it will be more of a cost perspective that you have to monitor the cost. Yeah. As an investor, which business sector you actually like best now? Again, the moment and why? I like manufacturing because the expectations are low. Because of all the lockdowns or MCO, the expectation is actually quite low. So I like manufacturing-based business, industrial. I like consumer. Again, as I mentioned, expectation. When I said consumer, okay, let me be more specific. I'm retail consumer, right? Because all the store closed, we can't perform, we can't do business. But when the economy starts to open, that's where the business is going to come. Banking, I think I like banking. And I like building materials. I think these are the key 4 sectors which I like. Yeah. How do I look at China government's anti-monopoly? As I mentioned very earlier, you can watch it replay. There are grounds for that because, as I said, these companies are growing so big. I'm not commenting it's right or wrong, but I'm saying on another side of it perspective, right? This company has grown so big that if you don't do something about it, right, they control the future, and it will actually prevent other smaller companies' chance of survival. Right? So yeah, there's not right and no wrong, but I think the government, when they look at different perspectives, but also the government perspective is always very different from business perspective. They have other things to take care of, right? Like providing conducive environment for other players to have a chance to survive. Okay, I developed renewable energy and solar energy LSS4 projects. As I mentioned earlier, I think LSS4 is very competitive at the rate they're tendering. I think the IR is very low. And when the IR is very low, that means the contractor will be squeezed. Right? It's a flow through, right? Because if you win the project, your margin is low, you're going to squeeze the contractor. That's why I find that the renewable energy sector in Malaysia will be quite challenging going forward. Do I expect a crash given a high national debt, potential interest rate, suppressed inflation, investment trading, copycats behavior? What are views on this heated environment? I don't expect the market to crash. Correction, yes, but not a crash. High national debts, the saving grace is you are not the only country pumping money, or it's a global event that due to this COVID issue, right? So on a comparative basis, we are not alone per se. But if you have to change the situation, as we know, Malaysia is the only country that's doing this, we're in trouble. But I think the saving grace everybody is doing it. Potential interest rate increase, I don't think it's, see, this inflation, right? You must understand inflation, you take a step deeper, it comes from where? Right? I don't think this inflation is sustainable or it's going to stay high for long because there's no supply issue. When there's a supply issue, demand is still there, so it's pushing up the inflation. But once the supply resumes, right, when all this lockdown resumes, right, let me rephrase it, when the business activity resumes, not lockdown resumes, right, when supply start to slowly come into the market, you actually ease the inflation. So that I have a very different view of inflation. I could be wrong, but my view is I don't think the current high inflation is purely due to demand. I think the supply push is also playing a very big factor in this inflation. So my view is I don't think inflation will stay high for very long. Right? I think it's going to gradually ease. So when inflation starts to ease down, the pressure to increase interest rate will be lessened. Right? So that's my view. I don't think interest rate will be increased in any short term. Exuberant trading and copycat behaviors, I'm not sure about this. Yeah, so I'm not sure what it means. Sorry. Okay. Can you share about process of monitoring and viewing company performance during quarterly reporting season? What do you read? How much debt do you rework your valuation model? Quarterly reporting, see, there's two sides of it. Being overly focused on quarterly can also have a downside. Because for those who run business, you know, right? Imagine now I expect you to do well every 3 months. If you're a businessman, you know this is a nightmare, right? No. I think I thought a lot of owners, their most most people's biggest regret after going listing is that, hey, now I'm being measured on a very quarterly basis. I think, yes, monitor quarterly numbers, but have to be realistic. Don't expect companies to deliver strong numbers every quarter, right? I think if a company really delivers strong numbers every quarter, you should be suspicious of how they're able to do it rather than be excited about it, right? So it's both, you have to balance both. You have to be realistic in your expectation. That is, for those who do business, that there won't be sunshine every day. Likewise, there won't be a sunshine every quarter, right? Yeah. Can I opinion on Hubsing coming dividend that pay more than total earning, cash reducing less quarter? Of course, because you see, dividend actually comes from the cash, not the earnings. So when they start to pay you more and more dividend, the cash will definitely decrease. You see where I'm coming from? So I didn't really analyze into Hubsing. It's not on my watch list. But then you really go look at the cash flow statement. Where is the reason behind the cash? It could also be due to, when there's a lot of operating expenses that is need to sustain your lockdown when your sales can't do that. No, probably. It can also be due to paying out of their payables or their suppliers. Could be also. It can also due to dividend. All these answers you can actually find in the cash flow statement. Do follow it. I not watch this, so I haven't really monitored it. Yeah. Will Air Asia flight again will be submarine due to high cash burn can survive? That's a very good question. You see, being able to fly again is the first question. The second question is, how long will it take before your passenger traffic goes up back to pre-pandemic level? I think that's another question. You may start to fly, you may start to resume activities. But if your capacity maintains at 20% of a pre-pandemic level, you'll also be in trouble. So these are the two questions, right? Not only the first one, will you fly again? Yes, you will fly again. But how long will it take before your capacity goes back to pre-pandemic level? I think the second is the bigger challenge than the first. Yeah. What is your view on the agriculture, industrial, chemical sector with companies like Ancom and Inmas Pro? I'm always an issue on the margins, right? So that's why I often never really track these companies. The margins are quite volatile and also quite on the low side. So I apologize because that's why I don't track these companies per se. Yeah. When is the time to sell our stock based on valuation, no more growth, or other consideration? There's two things that I use it as a benchmark. First, of course, is valuation. Second is how fast it goes up, or how fast has been the surge. If a share price go up way too fast, there'll always be a correction after that, right? So these are the two parameters that you look. But the more important parameter, which is the third one, or actually rephrase is the first one, is your investment decision or your selling decision should always be based on the objective. Before you enter into a stock, always ask yourself this question: how much profit do you expect to make? Okay, let's say for instance, you invest into these stocks, you say, I hope to make 20% out of it. Okay, so once you hit there, you hit 20%, or even hit 25 or 30%, you have made or surpassed your objective, dispose it, be happy about it. Even if subsequently the share price keeps going up higher, don't feel upset about it. Because most importantly, investing is what? Is meeting your investment objective, your personal investment objective, not your neighbors, not your auntie, not your uncle, not your friend. You may have sold off 30% profit. Your friend hold on and make 50% profit. There's nothing to be upset about because you have met your investment objective. He has met his investment objective. That should be the benchmark. I comment more on business. This company, they are more of E&E. They're assembly high-end speakers, high-end sound system. Okay, I'm speakers, high-end sound system for global high-end brands, right? So definitely they are one of the beneficiary of the outsourcing, of the change in sourcing globally, right? Where more and more people are looking out of China kind of assembly operations, right? So definitely this is one of the company where it's benefiting from this trend. Okay, it's 10 o'clock. Thanks for watching. Let me have a last update about how much we've collected. Okay, thank you so much. in total, we've actually collected 15,806. Honestly, it really surpassed my expectation. Thank you so much for all your generosity, and really thank you for joining me in this session. Um, Again, a heartfelt thanks from all the potential recipients, the families that you guys um, have indirectly able to help. This is really a difficult time. Uh, mm, I find quite difficult to express, but if you're still alone, it's fine. But imagine the situation where you have a family to feed, and you really can't put food on the table. You know, as a parent, uh, I think that the emotion is hard to describe. Right? This pain, I think heartache pain, I think is too is underquoted expression. Right? We get a lot of stories every day. I mean, we get a lot of messages, and it's actually very heartbreaking to see their condition. So that is actually why, always be thankful, have gratitude with what we have. Um, Whenever we think that we are being miserable, um, there's always people who are actually in a worse state than us. Yeah. So once again, thank you for all your joining me in this session. I really appreciate it. And again, thank you for all your contribution. Um, I don't know how to express it. Really, really sincere thanks. Yeah. Have a good evening and stay safe and goodbye. Thank you very much.